Okay, let's welcome on board Aashish Somaiyaa as well and chat about what he's taking away from the market right now. Aashish, hi, afternoon. A much buoyant market, or at least mood, so to speak. But do you really think that investors will now have a change of mind and what was announced by the Prime Minister, details of which we are awaiting at 4 p.m. today from the Finance Minister, is going to be a bit of a game changer when it comes to investor sentiment per se? What have been your interactions through the day or since last night with your own investors? Does the mood seem upbeat?
Yeah, definitely it's seen to be as a kind of encouraging development. You know, because if you see from Delhi itself, in the last few days, the pronouncements that were coming seem to be slightly different. And, basically the message that was coming was that we will do it gradually and, we will watch out for it. So there was always this intent which came out very clearly that, there are some steps which are around the corner. Yesterday, for example, a big bang kind of announcement, which at least on the headline number seemed very, very large, and secondly also came at an unexpected point in time. So clearly from that perspective, it's a positive surprise. And, even after one keeps the RBI's actions aside, at least the intent seems to be quite clear to act on the current scenario. Last point is that, this is not something which is stated, but what I would also read into it is that since all of March and April, there was this discussion about a stimulus package, and it's come here in the middle of May. It also tells me that eventually the intent to get out of the lockdown, because, you have to see the timing, you would time the stimulus when you want to kickstart things, which means probably there is an intent to get out of the lockdown also pretty soon.
Yeah, that seems to be the case. But tell me, what have been your interactions with clients so far? Are they looking or at least contemplating putting lumpy money in? Because we've been chatting every month when the AMFI data on the inflows comes out. Do you think those redemptions will plow and find their way back to the market? Because all of a sudden, with this big bazooka of the stimulus package being announced, the sentiment, like you're acknowledging, has also completely changed overnight.
Yeah, so we are not yet seeing any huge amount of flows or any lump sum, moves that, okay, let's jump in. We are not seeing that kind of action as of yet. I think people are still a bit circumspect. People still want to see the details. The other important point is that we ourselves are thinking that, what is the extent of the damage? I don't think till the first quarter goes by and till we see what comes, in terms of more numbers, I don't think, and till the time we are out of the lockdown and we see some sense of which direction the revival is taking, I don't think that there will be that much confidence really to jump in terms of lump sum. But yes, I can tell you one thing, that people are trying to figure out like when to invest. That clearly seems to be an area of interest. And we have been telling people that, don't do your typical systematic transfers. We've been telling people that, you stagger your investment from now till about September into various tranches. So there is a willingness, but I think the timing is unclear and people are watching for that.
Aashish, let's get in your take on what is happening with some of the mid-caps as well, because irrespective of the behavior of the index, we've seen the mid-cap index, which is held out quite steady. Tell us a little bit more about, the observations that you have of investor behavior when it comes to some of the mid-caps, because it seems like a lot of stocks are now immune to the kind of gyrations and volatility and declines that we've seen.
In some spaces, what has happened is that the valuations and the behavior of the last 2 years has been quite disconcerting. And in some spaces, there is clearly absolute value itself. So now it's not a question of the cap. What we've been communicating to our investors is that, we ourselves as a house are very heavy in mid-cap. So what we've been communicating to clients is that, it's not just about being preoccupied with what cap it is. I think as long as we are owning some differentiated businesses and as long as we are owning some sector leaders, we are definitely going to come out of this quite strongly. So we've been telling people to buy into mid-caps. At least, whoever I have spoken to, I have made it a point to tell them that, say about, 50% allocation between large cap and mid cap, because after this massive fall, if you're looking to enter, then at least you should enter with a 50-50 kind of allocation. That is one. And secondly, like I said, as long as people are buying sector leaders or differentiated businesses, that should not be a concern. And like I said, in the last 2 years, just because it's a particular cap, it's got hammered quite badly. And when there is panic, people lose their ability to differentiate. And I think people who now look at this thing in a more in a more conscious manner, people who are a bit more discerning, they stand to gain quite a lot.
Yeah, fair enough. And finally, Aashish, give us a sense as to which are some of the sectors that you believe investors should look to bet on at a time like this. Those that once we see resumption of things getting back to normal gradually, do stand the chance to see, if not a V-shaped recovery, some incremental value kicking in.
Put it this way that, if you have to do like when the dust settles, what kind of scenario or what could happen if you have to do some scenario building, I think one sector which stands out is my sense. And I'm not going by the typical things which are being discussed about the need for social distancing, etc., and personal mobility. Let's leave all of that aside because that seems to be more sentiment for the next few months. So I'm not talking about sentiment for the next few months. I'm saying something more on a fundamental basis. My sense is that in the last 12 to 15 months, anyway, auto as a sector was undergoing massive demand postponement, right from floods in certain parts of the country. And, everybody's abreast of all the developments, so I don't need to repeat them. But what will happen is at the end of this whole thing, typically after every slowdown, what you find is that there'll be massive liquidity. In fact, my sense is that one of the things which the government has been talking about, there are a lot of review meetings where, there are discussions about credit offtake, some sort of moral suasion in terms of growing credit. So what I feel is that sectors like auto, which, where four-wheelers, etc., where there is a dependence on availability of finance and interest rates, etc., my sense is that that is something which does have a chance for revival. I think valuations are also pretty much out there in the attractive zone. So if I really have to make conjecture or build scenarios of, what can happen in the next 6 to 9 months, I think auto is one place where there is massive demand postponement already. And when we come out of this, liquidity will be abundant and rates will be low. And my sense is banks will be looking to lend because for all the period that they're not lending, clearly they are under pressure. So this is one part of it, and that might apply to some other areas of consumer discretionary also. I mean, I don't think this is the popular thought. Everybody thinks that consumer discretionary will go through a really rough patch. But my analysis of last, 2003, 2009, a lot of these periods, what you find is that, home loan rates, auto loans, all these things become really attractive. So asset prices are already subdued. And on the other hand, financing becomes cheap and abundant. So maybe that could be a tailwind.
Fair enough. Aashish, good having you. Thanks very much for sharing with us your outlook on the markets. Fizzled out a tad more now, 90